The financial market is a fragile market. I am not surprised that we're entering an area of stagflation, the rising costs of these tariffs that are being imposed by Trump. It's a self-inflicted wound to the economy. Individual companies can run into trouble, financial companies, and you suddenly have a Lehman Brothers kind of situation that could disrupt the marketplace. You can't play games that Trump think he can do without it creating serious problems.
I'm pleased to have a conversation today with America's economist Mark Skousen, professor of economics at Chapman University and the author of his new book, The Greatest American, Benjamin Franklin, History's Most Versatile Genius. We'll be diving into three critical areas today. First, his investment outlook for navigating this period. Also his outlook on gross output, a different measure from GDP, and constitutional and economic implications of the current tariff battles. Welcome back to the show, Mark. It's been a very long time, and I am very pleased to have you back on the show. Thank you for being here.
Well, this is definitely a good time to be talking because there's a lot of divisiveness and uncertainty in the marketplace right now, that's for sure.
Well, Mark, why were you designated the America's Economist? That's a juicy title. How did that come about?
Yeah, it came about at the Las Vegas Money Show last year. Kim Githler presented me with the America's Economist, or America's #1 Economist Award, primarily because I'm one of the few economists who have 3 degrees in economics. I've worked for the government, the CIA. I've worked for private enterprise in a number of roles, including my FreedomFest conference and a consultant to IBM. And so I've been very much involved in the private sector and business. And finally, nonprofits. I was the president of FEE, the Foundation for Economic Education. So I've been in all these areas. I've been to 80 countries. I've traveled the world. I've been to 50 states. Mm-hmm. And I've written textbooks. I've written a history of economics called The Making of Modern Economics, a very popular textbook. And I've also written Economic Logic, a economics textbook, which is very different from all the other textbooks because it starts with the P&L statement. No other textbook in economics does that. They all start with supply and demand curve. And to me, that's not the way to start. The best way to start is to talk about profit and loss. So there's a lot of reasons why I think the designation was appropriate. And so I'm really pleased with that honor.
Well, we're honored to have you, Mark. So you've also been correct in calling for the 1987 Black Monday crash. So we have to make note of that. Leading up to 87, you've been warning your clients about a bubble burst, an impending bubble burst. Let's just link it back to today, Mark. The S&P is nearing 6,000 points again. Could you draw any similar parallels from today to 87?
Well, certainly the market was overvalued in 87 as it is today in terms of, I think, a major bull market that started with Reaganomics back in the early 1980s. So we're still benefiting from many of the concepts that were involved there. But there's no question that certain areas of the stock market could fall in half. I mean, the technology stocks could fall in half, and they'd still be overvalued, wouldn't they? So in terms of price earnings ratios and so on, there's a great deal of optimism, I think, there. And certainly our new president expresses that optimism, talking about making America great again and positive news about making America great and so forth. I'd like to make free market economics great again, personally, in that respect. But I don't think we're headed for a crash for a couple of reasons. One is we have in place the stops that where the market is requires you to stop trading when the market drops 5%, so forth. You also have the Plunge Protection Team, which is a organization of top government officials, Treasury, SEC chairman, the Fed chairman, who, when the market is plunging, they can intervene, and they will intervene to keep the market from from crashing. So I'm not predicting another stock market crash like some of the prophets of doom are doing. But I do think bear markets cannot be eliminated, and we could enter a bear market at any time if government policy is negative. And certainly imposing the trade war has certainly put a pause on this bull market. And notice that every time President Trump backs off of his trade war, the market rallies. I think they're getting a little tired of it now, though. So we need to have more permanent positive policies in order to move the stock market higher.
We'll come back to the tariffs in just a minute, and of course, we'll talk about FreedomFest. But just take a look at my screen now, Mark. Americans filing for jobless benefits last week rises to highest level in months. Filings for U.S. unemployment benefits rose to the highest level in 8 months last week, still remaining historically low despite growing uncertainty about how tariffs could impact the broader economy. New applications for jobless benefits rose by 8,000 to 247,000 for the week ending May 31st, says the Department of Labor. Analysts have forecast 237,000, so a little bit worse than expectations. Mark, how are you balancing supposedly weaker employment numbers, at least on the surface, versus seemingly euphoria in the stock markets?
I think there's euphoria in the technology sector. I'm not sure we would say euphoria. I don't think we've reached the point of euphoria in the stock market, but certainly the bull market is still in place. I'm fully invested in the marketplace. We rode through the short-term bear market when Liberation Day, which is a fake news term that Trump used to describe his anti-market announcements against globalization and in favor of protectionism. Markets don't really like that in that particular way. So I am not surprised that we're entering an area of stagflation, of rising prices due to the rising costs of these tariffs that are being imposed by Trump. It's a self-inflicted wound to the economy. I know GDP now is predicting 3.8% economic growth, GDP growth for the second quarter. However, if you look at my gross output statistic, it's been languishing now for over a year. B2B spending is down in real terms over the last year. Business spending in the last month creeped up 0.1%, and that was probably largely due to companies trying to increase their imports prior to the imposition of these tariffs. So I think GDP is a little bit misleading into what's really happening in the economy, and that's why you have to look at gross output, because that includes the supply chain. And the supply chain, the B2B spending, has been languishing, if not in a bit of a bear market. So it doesn't surprise me that job loss is still a significant problem here. And we haven't seen the full brunt of these tariff increases, but everybody I talk to says that prices they're being forced to raise prices as a result of this reversal in the trend toward globalization and free trade that we've had for over 100 years. This is a real paradigm shift here if this continues, and I'm hoping the Supreme Court will finally intervene and support the other U.S. The federal courts that have said that Trump exceeded his authority. He really had no constitutional power to impose universal across-the-board tariffs.
What is your general assessment of the court stepping in to intervene in fiscal and trade policy? Should it be the jurisdiction of the courts to oversee what Washington does in regards to trade?
I don't think they would intervene if the president hadn't used executive orders that were very suspect. So the legal system got into play here because President Trump used laws that were supposed to be for wartime or national emergencies. And for him to argue there's a national emergency on a trend that has been happening for over 50 years in this country, where we have increased imports dramatically. Our trade as a percent of GDP is at the highest level we've ever had until recently. 25 to 30% of GDP was due to trade. That's an upward trend that has been occurring for years. So why Trump would talk about we're being ripped off and stuff like that is really kind of fighting last year or last decade's wars.
Okay. You've been analyzing economic cycles for several decades now with forecasting strategies. Going back to my earlier question about 87, not particularly 87, but just what things were like in the past, how would you compare the current economic cycle with things you've witnessed before in terms of similarities, differences, concerns you're having, and generally what investors should be paying attention to in this cycle?
It does seem that every 10 years, maybe every 15 years, we go through some kind of a crisis. And the latest two examples, of course, is 2008, the financial crisis of 2008, which was a major collapse in the financial system and required dramatic action. And notice that you never did have a crash in the stock market. I think it dropped it dropped 5% one day, but not the 22% that we saw in 87. So I do think that there are some differences with the plunge protection team and the intervention that the markets themselves have set up. So I think that under the Fed is definitely more active in injecting liquidity when you have these crises. And then the second example was 2020, the COVID pandemic. The Fed intervened dramatically and increased the money supply 40% over a year period of time. If that wasn't inflationary, I don't know what is, to keep the system afloat. So today, I don't think this is just a self-inflicted wound by the Trump administration adopting these anti-market policies, and also the uncertainty regarding the tax legislation. We lack permanent, dependable law anymore. This is the problem. Trump is a disruptor par excellence. And he's taking full advantage of this with his executive authority. And as long as he has this power, we're going to continue to see incredible volatility in the marketplace. And it's just not a good situation. And particularly, you'll notice that there is this separation, this gap now between the yield on Treasury securities and the dollar. They used to move together, and now they don't. In other words, the dollar is, while interest rates are rising, normally you would expect the dollar to rally, but it's not. The dollar has been losing value for the last 6 months. This is a very dangerous separation or gap, if you will, between what is normally a consensus, a movement together that you often see, but you're not seeing it now. You're seeing this separation between the yield on the treasuries and the value of the dollar. So people are losing faith in the dollar. And it's because of this trade war, primarily. I think that's the main factor. So it is, we are entering a danger zone. This is why gold is doing so well. I'm a big fan of gold, better than Bitcoin. I think that's the last resort is gold as an investment.
Okay, so that leads me to my next question. Uncertainty, investing in times of uncertainty. Gold is better than Bitcoin during times of uncertainty. Why?
Well, we don't really know. I'm just basing it on what we're seeing. And it was viewed with Bitcoin as such a new commodity or new asset that we're not really sure how it's responding. It turns out that it's responding more to what technology is doing. Bitcoin and the blockchain technology is viewed as a technology play. So when technology stocks do well, Bitcoin does well. However, when the dollar is collapsing and there is a crisis, notice Bitcoin dropped in value while gold went up. So I think gold is the ultimate hedge here, and you have a safer, more traditional way to protect yourself, to hedge if you stay with gold. More than any other commodity. That's definitely the one to be in when we're facing this kind of a crisis. We get back to normalcy and a period of permanent inflation. I think Bitcoin can serve as a hedge against inflation, but not a crisis hedge.
So do you think that Bitcoin and gold rose to new all-time highs over the past 6 months for different reasons, keeping in mind Bitcoin surpassed $100,000 late last year?
Yes, indeed. In fact, you'll notice Bitcoin hit that all-time high of 110,000 per coin or whatever it was when Trump backed off of his terrifying trade war. And gold went back down. But as soon as he doubled down on the trade war, gold went up and Bitcoin went down. So I think they're both in my portfolio. In my newsletter, Forecasts and Strategies, we recommend a blockchain ETF. BLOK is the symbol. That's the Amplified Transformational Data Fund ETF. But block is a great way to remember it, BLOK. And we're recommending gold, GLD, the gold shares, investing in gold. And I'm also recommending Kinross Gold. I think Kinross is the best major gold company out there today. It's one of the top 10 gold producers in the U.S. and Canada. It has some of the highest profit margins, doesn't pay much in dividends, but it's been a big performer. So I like Kinross a lot.
Since you brought up Kinross, how do you pick gold miners to invest in? I mean, Kinross has good profit margins, like you mentioned. Yeah. But what separates Kinross from a Newmont or a Barrick or Yamana, for example?
Well, I think that they're expanding their production, they're keeping their costs under control, so their profit margins are rising faster than some of these other bigger companies. They're well diversified, they're not overly exposed to high-risk countries. So there's a lot of reasons why I think Kinross seems to fit the bill for me. And performance, I mean, it's really hard to beat Kinross's performance. A lot of times gold mining companies will drop and Kinross will keep going up. So there's a lot of technical and fundamental reasons that I like Kinross.
But generally, when you look for a gold miner, are there several attributes or characteristics that are top of the list for you?
Profit margins are really very important, and also that they can expand on their mining operations, that they're still growing and expanding in that arena. So that's a factor. And then also just what is behaving the best. And I mean, I've looked at Agnito. I mean, I've recommended a lot of these, I Am Gold and so forth, but it's just my experience over the last few years is Kinross has done the best of all of them. And I should add that I have not been a fan of gold mining companies for a long period of time. You remember there was a good 20-year period where mining companies were not a leveraged way. Gold actually outperformed the mining companies. I'm sure you're aware of this. And the reason is because of environmental controls and concern that they couldn't find any new gold mines out there, that the amount of gold production is in a secular decline. So there's a lot of factors that have kept gold mining companies from performing their normal function of being a leveraged way to profit from gold. Gold will go up 10% and the mining companies should go up 20 or 30%. Well, it didn't work for a good 20 years. Finally, it's happening in the last year, and that's why I've added Kinross and other mining companies to my portfolio.
Speaking of gold and gold miners, do you think gold in itself has more room to climb? And then we'll talk about the miners in just a minute. $3,300 is today's price.
Yeah, and it hit 35, which is 100 times more than $35 an ounce over 50 years ago. That's truly and notice that as soon as it hit 35,000, 3,500, it dropped from there and hasn't come back to that level. No, I think there's more opportunity in the mining companies now than in gold. So I'm stressing my investments in mining companies over gold. I think gold has made its big move, and I think it's going to struggle from here for a while.
Are you then saying that perhaps Bitcoin can start to outperform gold for the rest of the year, or will Bitcoin also meet the same fate as gold, meaning it's hit its big move already?
So the halving event occurred last year, so it's a little bit harder to mine Bitcoin. And I do think that Bitcoin is linked to technology. So the big issue is the Trump tariffs. And if he backs off of that and, adopts his taco strategy, I think there's a possibility that the technology stocks will have another run and Bitcoin will go with it. So Bitcoin has a better possibility, I think, than gold itself at this stage, but it's completely contingent on geopolitics right now.
Well, let's just, so moving back to tariffs. So with tariff uncertainty still front and center, court battles are ensuing, and we don't know if Trump's tariffs will be lifted. If you were a business owner, a small business owner in America whose livelihood depends on supply chains, what would you be doing right now?
Well, the only thing you can do, unless you engage in black market activities, is to build up your inventories. And you saw a dramatic increase in imports in the last few months. And now the imports are coming down, mainly because the tariffs are now taking their toll. So if you've established some kind of system where you build up your inventories, then you can protect yourself in the short term, certainly in that regard. And believe me, we are a global economy, and there's very few products even that are made in the United States that don't require components from abroad. Even the automobile, the Fords and GM automobiles, 40% of their components come from abroad. So the supply chain is being disrupted. You see a dramatic drop in the number of fleets bringing product to the U.S. shores from China, from Asia. This is not a good sign for the economy. And unless it's resolved rather quickly, and I know Trump announced that he's now talking to the Chinese, but yes, believe me, unless the end result has to be lower tariffs across the board. If it means higher tariffs, and remember, the United States had 2 to 3% tariffs. We were almost a free trade zone for many years. And if you have across the board tariffs of 10%, that's 3 or 4 times more than what we had before. And on Chinese products, if it's at 50%, take steel, for example, 50%, that's a disaster. I mean, Trump he must not be listening to any sound economists at all. He's listening to Peter Navarro, who really is pretty dumb and very dogmatic in his protectionist views. And he's apparently got the president's ear. It's most unfortunate that that's happening. But as all economists know, steel is an import, an input, right? Steel is not a final product, so it's used in other products. So yes, you're going to save a few jobs and increase job creation with U.S. Steel and some of these other companies. But everyone who uses steel for inputs is going to face layoffs and lower profit margins. So it's a total disaster. I call it Trump's disaster plan.
By the way, real GDP in Q1 was negative, partly in part, or mostly in part, due to the high level of imports, as you alluded to earlier, Dr. Skousen. Do you think that the economy was actually in a contraction genuinely in a contraction in Q1, or was it just an accounting measure that brought down real GDP to negative territory because net exports were negative?
Yeah, I don't think you can determine whether you're in a recession from one quarter's statistics that the change is relatively minor, a 0.2% decline. I mean, GDP now is predicting 3.8% for the second quarter, so it's bouncing back. And of course, you have to remember GDP leaves out the supply chain. They subtract imports. They subtract imports because it's already included in the other components. So it's a way of avoiding double counting is what's happening here. So you can easily get misled with GDP statistics as what's happening in the economy. It overplays consumption, and consumption is doing well. Consumers are spending. There's no question about it. And that's largely because Biden handed out billions of dollars, trillions of dollars in payments to people, hiring federal workers. You notice job creation in the last year was almost entirely at the federal level rather than private enterprise. Private enterprise business spending was largely in a recession last year. So you had a recession, but it was a business recession, not a consumption recession, and certainly not a government recession. Now that could change. So you might have a government recession to some extent, depending on how this the big, beautiful bill passes Congress. I think it's stalled now because of Elon Musk, who has warned that it's a pork barrel legislation, and the only cut they're making is in Medicaid, and there's a lot hue and a cry and a complaint about that, even though it makes perfect sense to me. I like the idea. I think either Trump or Senator Rand Paul or somebody suggested just a 10% across the board cut in all government programs, including defense. I think that would be a smart move as a way to maybe get government spending out in control and making America great again.
By the way, speaking of tariffs being lowered, I think it was Christopher Waller, Fed Governor Waller, said that should tariffs be brought down to a 10% base level across the board, the Fed may be still open to cuts later in the summer, as early as July, actually. What's your outlook on Fed policy? Can we get a cut by July?
I think it's very unlikely. The only reason you'd have a cut in interest rates is if the Fed panicked. And I don't think the Fed is panicking. If anything they're worried about is higher costs, pushing a cost push inflation going on. That's a very serious problem that will keep the Fed, I think, from raising rates or from lowering rates. And why do they need to lower rates? I don't really see. You just need to follow the bond market. Whatever the bond market's doing, that's what the Fed should do. Should be a fairly easy job, and they need to stabilize the money supply, as Steve Hanke and other supply side monitors have argued. This is what needs to be done. I don't think cutting interest rates is really going to do much of anything.
By the way, Professor Steve Hanke, whom I should have you and you on a panel with very soon, he and other economists are sounding alarm bell on the debt crisis that's pending. We're looming in America. 31 trillion and counting in debt. The fiscal deficit is going to be even wider now with the big, beautiful bill it's projected. Is there a sustainable path forward? In other words, can we, just be optimistic here and see on the positive side, maybe the debt will be rolled over, maybe debt to GDP will stay at a reasonable level, and maybe this won't be an issue. What do you think?
Certainly has not been an issue until recently, and there have been some cracks in the bond market, as you know, the Treasury bond market. Can they really finance $9 trillion, rolling over $9 trillion this year? These numbers are really getting pretty big, and will investors buy? You still have to attract investors, right, from all around the world, and Trump has made so many enemies overseas. He needs to channel Ben Franklin and be more diplomatic in his relations. He's creating a lot of disruption in the system, and you have to be careful because the financial market is a fragile market. It's leveraged. It's based on fractional reserves. And individual companies can run into trouble, financial companies, and you suddenly have a Lehman Brothers kind of situation that could disrupt the marketplace. You can't play games that Trump thinks to think he can do without it creating serious problems. So it is something to be concerned about, and I'm sure the Fed is aware of that.
All right, let's talk about gross output. It's a different measure that you're using from GDP. Just maybe explain to the layman how it works before we get into your actual analysis and forecast.
So gross output is the top line in national income accounting. We really have two measures of the economy. We have top line and bottom line. And for years, we just had the bottom line, GDP. But GDP leaves out the supply chain. The supply chain, the value of the supply chain is bigger than GDP itself. So remember, GDP is final output only. So it measures all the goods and services, my hat, shirt, pen, your glasses, your cell phones, and all of that stuff that you're seeing in the background. That's all produced. That's all measured in GDP. But all the stages of production, the supply chain that gets you to GDP, that's left out of GDP. So what I've suggested, and I argued this in my book, The Structure of Production, back in 1990, that we need a top line and a bottom line. The top line is total spending at all stages of production. It's called gross output. And in 2014, the federal government, the BEA, started measuring it. They followed my advice. I'll never forget the email I received from the director of the BEA who said, we're now going to measure gross output. Unfortunately, most people don't know about it because it's kind of hidden in the BEA data. It does come out quarterly, but it comes out 2 months after GDP. So a lot of people don't cover it, but it's a really important statistic that measures total spending in the economy. It's more than double GDP because it includes all those chains, all those intermediate stages that produce the final product. And it varies a lot. And it includes used goods, for example, that GDP does not include. It includes black market activity once it gets into the supply chain. There's a lot of things that happen in that supply chain that don't show up in GDP. So what is GO saying? Well, the latest data that we have shows that GO is growing slower than GDP. It is growing. And it showed that it was growing in 2020. There was no recession in 2020 that GDP showed. So they do move in different directions. And right now it's growing at a slower rate than GDP, which is an indication of a business recession. So we'll see where that lands us once this data comes in on the effect of the tariffs. That will be telling, and we won't know until June. This is my website.
Yeah, this is your article that I wanted to bring up. So in reference to what you just said, you wrote here, the main concern is the fourth quarter business B2B spending, which increased only 0.6% in real terms after rising 2.9% in the preceding periods. What do you think contributed to this lower growth in B2B spending, and is it a leading indicator for economic contraction overall, usually?
Yeah, and you're focusing on my mskousen.com personal website, but grossoutput.com is where I have all of the quarterly press releases and my articles on that. And I would just say that government was booming last year, consumer spending was doing really well, but business spending was struggling. That's what gross output is basically saying. So this is an indication of a stagflation occurring in the business sector, and especially B2B, the supply chain. And that usually anticipates a full recession in the economy down the road. It's really hard to predict, though, when this would happen because much depends on government policy, the attitude of consumers. They don't all move together in the same direction.
What does the latest GO paint for us in terms of economic outlook for the rest of the year, Mark?
Well, unfortunately, we won't get first quarter GO. There's this 2 month delay, and the BEA is doing what they can. They keep promising me that they will try to make it come out at the same time as GDP. So while GDP first quarter, you've already had two estimates come out showing real GDP slightly declining. GO won't come out until the end of this month. And when it does, we'll have a better indicator. However, there are some other private forecasters who put out an index of business activity, and they show a 0.1% increase last month in business spending. So it sounds like it's still a business recession is still in place, and I think the tariffs is just going to exacerbate that situation.
Generally speaking, Mark, as an investor, how do you use GO or even GDP data to make investment decisions? Given that, of course, it's lagging, but are there any useful leading indicators to use?
I think generally GO is a leading indicator, as is the B2B spending, and it will predict if we're going through a recession. If we're going through a recession, that probably means that we're going to have a bear market on Wall Street. And so I think it is useful in that direction. But again, it's kind of a loose correlation. It's hard. There's so many factors involved because the market is always looking forward and all the GO and GDP data is looking backwards. And so you have to look forward. And so second quarter GDP looks pretty positive right now, especially with new investments coming into the United States that Trump is heralding and saying, isn't this fantastic? We have all these companies coming back to manufacture in the U.S. So that could create a mini boom that could go on for a while, and it make it look like Trump was a brilliant negotiator. By raising these very high tariffs, he's encouraging foreign companies and American companies to come back to the U.S. and produce. So we may be doing better, but only at the expense of foreign countries. And win-lose is not a good economic model. Win-win is what you want, not win-lose.
You mentioned to me offline that President Trump could learn a few things from Benjamin Franklin, who is the subject of your new book, The Greatest American, Benjamin Franklin, History's Most Versatile Genius. Can you just maybe give us
the book right there?
There it is. Hardcover. We can get that on Amazon, link down below. What made Benjamin Franklin such a good statesman? What made him such a good negotiator?
Well, he learned from experience, which all negotiators do in that respect. At one point, he had a very difficult time with the Pennsylvania legislature. He had a lot of enemies. He was based in Philadelphia, and the Pennsylvania legislature, there were a number of people who didn't like Franklin. Franklin did a thing that I thought was really cool. He decided to go to his worst enemy, and he said, I'd like to borrow a book. I see you have a certain book in your library. I'd really like to borrow it. And they developed a friendship as a result of that. And as a result, he got through all kinds of legislation, including his bill to print money. Franklin was a bit of an inflationist, and he got that through Congress, through the legislature, by befriending his enemies. So there's a lot to be said for that. He said he determined after that to try to minimize his list of enemies. He did think enemies served a very good purpose. He said that he quoted Reverend Whitfield, who was a Methodist preacher, who said, I always, when I look at some boys pelting a tree, an apple tree, I always came to the conclusion that there was fruit that was on the tree, and that's why they were pelting the tree. So enemies do you good because it teaches you to be a better person and how you can overcome your enemies. So I think that's a really valuable lesson that Trump could learn instead of all the name calling and stuff like that. I don't think you are very successful in life when you divide people the way he has in that respect. The other thing is Ben Franklin was a free trader. He said no nation was ever ruined by trade. So this idea that everyone's being ripped off, are consumers really being hurt by globalization? No, we have better quantity, quality, and variety and lower prices because Walmart can produce products in China, and we can get an iPhone that only it costs less than $1,000 instead of $10,000, which is what it would cost if it was made in the United States. And you create all kinds of animosity toward people. I mean, people outside the United States, they hate Trump. They are angry. They see him as the ugly American, bringing back the image of the ugly American. You're seeing this in Canada with all his talk about the 51st country. By the way, Franklin tried to negotiate in the English in the treaty with England after the end of the American Revolution to annex Canada. He wanted Canada as part of the United States, but it never happened, and it never will, as I'm sure you'll agree. Canadians are very much opposed to being the 51st state. So
I think there was a poll done recently. I think like something like 30% of Canadians wouldn't mind. So it really depends who you're asking.
Yeah,
I think Canadians are generally west, just apathetic. Yes,
out west in that regard. But Franklin was also very good. In my book, by the way, it's not a typical biography. This is 80 chapters about Franklin's relevance today on taxes, trade, inflation, foreign policy, culture. I have chapters on all of those things, on how Franklin can make you a better businessman, a better investor, a better American in so many ways. So he lived to be 84, and I counted 22 careers that he lived in. You know, he's a scientist and inventor. He was America's first scientific American, first ambassador. He was a ladies' man. I mean, there are a lot of things about Franklin that I talk about in The Greatest American that I think people appreciate.
Well, you talked about all of those things. So what is one fact, before we move on to the last topic, what is one fact about Ben Franklin that you found the most interesting during your research for the writing of this book?
Well, there's a couple of things, but one is that he changed his mind regarding minorities. He visited in the Negro School of Philadelphia, which he helped fund. And when he went there, he said, I discovered that the black students were just as sharp as the white students. So he kind of shed this view of inferiority of the black race that was very common at that time. And so he went from being a slave holder, never owned very many slaves, but he did have a few in his household, to being an abolitionist. And he was the president of the first Pennsylvania Society to abolish slavery, and tried to introduce legislation to end slavery during his lifetime. So that was really impressive. And the other thing that was really interesting was his change in his belief system. As a religious person, he was somewhat of a skeptic, a heretic, if you will. He was not a regular churchgoer. He was more of a deist. He didn't deny the existence of God, but he really did. He wasn't a church-going Anglican or Baptist or what have you. But at the end of his life, because of the American Revolution, he saw overwhelming evidence that God intervened so the Americans would win their independence. And at the end of his life, he said, have we not learned that God governs in the affairs of men? And he actually introduced prayer into the Constitutional Convention to get them to agree to the compromises that were necessary to pass the Constitution in the Constitutional Convention. So he did give a warning, and I'll end with this, and I talk about this in The Greatest American book. He said when he was through, and a woman came up to him after the Constitutional Convention was over and after they'd signed it, and he said, well, Dr. Franklin, what kind of government do we have? And he said, a republic if you can keep it. He was very opposed to the monarchy, but he warned in America that someday a king could rule over us. And I fear that if we give the president too much power with his executive orders, then you have one man rule. And that's something that Franklin was totally opposed to. And I think most Americans and most Canadians would be as well.
Finally, you are the producer of FreedomFest. It's a great conference I've attended myself in the past. What can we expect this year? What are some highlights?
Well, this year we're actually going to California. We're in Palm Springs, California, which was Hollywood's getaway. And we actually have Mark Elliott, who's Hollywood's biographer, doing a tour of all the famous places where Frank Sinatra and Cary Grant, people like that, Ronald Reagan lived, had their second homes there and stuff. But our theme is the oasis of liberty. You get away and come together to network and learn and celebrate liberty. We have Ryan Holiday, the Stoic philosopher, who's the #1 motivational speaker. We have Kat Timpf, who is on Gutfeld on a regular basis. We have Kennedy from Fox News as our MC. We have Steve Forbes there, and he's on a panel with Art Laffer. C-SPAN is going to be covering us. This is all next week, June 11th through the 14th, and we have about 1,500 people who are showing up in Palm Springs. It's really going to be a lot of fun. So if they go to freedomfest.com, we still have room for tickets and people who would like to come even for a day if you wish. And it's really going to be a great conference.
Thank you. Excellent. We'll look forward to that. And where else can we follow you on social media and we're online, Mark?
So my website is markskousen.com. But if anybody's interested in any of my books, including the Greatest American, my latest book, I do have a website called skousenbooks.com, SKOUSEN books.com. And there I autograph every copy and we mail it at no extra charge at a discount. And you can get my other books there, The Maxims of Wall Street and Economic Logic and the Making of Modern Economics. I have about 4 or 5 titles there. So that's the place to get them at a discount, skousenbooks.com.
Okay, we'll put the links down below. Thank you very much, Mark. I very much look forward to the next time we speak. So take care for now, and thank you for coming back.
All right. Thank you, David. Real pleasure. Be free, as Ben Franklin would say.
Be free. Well, this is a model for us all. Thank you. We'll try. The pleasure's all on this side, Mark. And thank you for watching. Don't forget to like and subscribe. Follow Mark in the links down below.